GBP shoots higher after UK Finance Minister Sajid Javid surprisingly, unexpectedly resigns. Right, guys, so what happened today, right? So this man here, Mr. Baldy, Mr. Sajid Javid, Mr. Shiny Forehead, he resigned, and it was a bit of a shock. Nobody was really... I mean, there'd been rumours going around for a couple of months that he might eventually go, but nobody expected it today. So when the markets got news of his resignation, GBP rallied, shot higher, right? It was well below 130, that's cable, GBPUSD, well below 130, but now it's at like 130.40, pushing 130.50, right? So it's like a 60, 70 pip rally, quite a good rally. Why is GBP rallying on this news then? Well, I need to give you a bit of background about a disagreement that this man has and has had in the last couple of months with the UK Prime Minister Boris Johnson and his team, right? So Boris Johnson, he wants to spend money. He wants to splash the cash on big infrastructure projects. He wants to do that to, you know, like, he says to invest in the future of the country. It's also just generally to boost the economy, right? He wants to spend a bit of money, boost the economy, because what politician doesn't want to boost the economy, right? It always makes them popular. Sajid Javid, on the other hand, he's a bit more like your traditional Conservative type, right? So he doesn't like to spend too much money, wants to keep the budget deficit small. Why does this all matter for markets then? So generally speaking, when a government spends more money, it boosts the economy and it boosts inflation. And that collectively boosts that country's currency. So for example, if we see massive fiscal stimulus, government spending in the UK, that's going to boost the UK economy, and as such that's going to boost this guy, sterling. So that is why we saw this reaction, right? Javid gone, that means a barrier to all this fiscal stimulus that Boris Johnson wants is gone. So they have replaced Javid with a guy called Rishi Sunak, apologies for any mispronunciation there, and he's expected to kind of do what Boris Johnson tells him, right? So yeah, it really looks like they've got the Exchequer on side with what Boris Johnson wants. So yeah, looking ahead for sterling and fiscal stimulus in the UK, what are we expecting? Well, next month we've got the March budget. We're not really expecting Javid's resignation to have too much of an effect on that budget because, you know, it's so soon, it's already been written, it's already been all agreed to. So I wouldn't expect anything to happen on this front too soon. It's gonna be, you know, in 6 months towards the end of the year, that's when we might see in that extra cash come in and start boosting the economy, right? So what does this all mean for the long term of GBP? Well, GBP, it's a mad one. We've been talking recently about how GBP's on a roller coaster, and that's because there's so many different forces pushing it up, pushing it down, pushing it up, pushing it down. Obviously, something pushing it up that we're just talking about now, the potential for fiscal stimulus. Another thing that's been pushing it up recently is the Bank of England, right? The Bank of England, they are basically in wait and see mode. They didn't want to be too dovish. We were kind of expecting them to maybe favour rate cuts, but they were neutral, right? So that's also been pushing up sterling. On the other side, though, you've got these incredibly tense negotiations that are about to start between the EU and the UK, and constant fears that we're going to get to the end of the year, to the end of the transition period, and there's going to be no deal. It's going to be a WTO Brexit, which would be a catastrophe for the economy, right? And that's been pushing sterling down. So we're just going to have to juggle these themes, guys, for the rest of the year. It's a tough one to call, sterling, at the moment. Guys, we're going to be on top of these themes constantly. That is pretty much it from me for now. I will see you in the next one.